Watch a market in motion, and it can feel entirely random. It's an inherently chaotic environment of violent price swings without any obvious pattern. Traders traditionally try to make sense of this noise by waiting for the final bell. They rely on the closing price of a market session to figure out what just happened and to decide their next move. But that final number can be deceptive. A stock might spend the entire day trending down, only to spike in the final seconds, creating a false sense of momentum that doesn't reflect the session's actual direction. To see where an asset is actually going, we need a way to strip away those erratic spikes and expose the underlying trend hiding beneath the surface. This is where the supertrend indicator comes in. By applying a mathematical formula to the chaos, it organizes the data into clear zones, providing immediate clarity on whether to buy or sell. The mechanics of this system are built on a specific equation: the high plus the low divided by 2, plus or minus a multiplier times the ATR. This formula ignores the open and close. Instead, it measures the absolute peak and lowest valley to find the exact mathematical midpoint. Adding the closing price dot shows how far it drifts from center, illustrating how last-minute swings skew perspective. Anchoring the calculation to this midpoint creates a more balanced view of what the asset actually did during that session. Connecting those points over multiple days generates a smooth, continuous baseline curve that reflects the market's true average path. By prioritizing this calculated average over the closing price, the indicator secures an objective foundation for tracking the trend. This curve is surrounded by a buffer zone calculated using the average true range, measuring price intensity. As the market becomes volatile, the zone widens. When it settles into a tight range, the zone dramatically narrows. We then apply a multiplier, a fixed number like 1.5 or 3, which dictates exactly how far away we set our buffer limits. As the zone hardens into a stepped line, the supertrend is complete. The ATR and multiplier have created a dynamic barrier that sits at a calculated distance from the price action. When the price bars cross and close above this line, the indicator flips green, delivering a signal to buy. If the price breaks through and closes below the line, it turns red, signaling a sell. These interlocking variables create a system where every signal is tethered to a specific numerical threshold. It converts fluctuating price data into a solid, fixed point of reference that clearly dictates the next move. Zooming out to a macro level, the focus shifts toward riding these long-term directional flows over months or even years. Looking at the market through this wider lens shows that minor dips are often just expected noise within a larger upward climb. However, no mathematical indicator should be used in a vacuum. Successful traders integrate the supertrend with structural market levels, mapping out the hard horizontal lines of support, where prices tend to stop falling, and resistance, where they struggle to rise. Cross-referencing the indicator signals with these structural barriers helps filter out false breakouts and identifies high-probability entry points. The supertrend serves as the mathematical engine for a disciplined, comprehensive trading strategy.